But position sizing and allocation also people don't understand very well. And since you want to talk about it, I would want to go a little deeper in that aspect. Because a lot of people in especially this kind of market cycle where things are rallying up, like in India also, we are going through a massive bull rally right now, right? Some people are saying that build your cash reserves and like wait for the cycle to turn, etc. So how does one navigate these kind of cycles or environments where everything looks like it's on a very positive trajectory? So where is the correction happening? How do you prepare for that to happen, and how much cash should you be holding while you're going through this?
Well, I think, like Mr. Govind Parekh has talked about this in the past. He's a very legendary investor on the last street, and he often talks about the importance of cash and how it gives him bear market buying power. So it's not a bad idea to hold 5 to 10% cash in your personal portfolio or your fund portfolio at all points of time. But as regards position sizing or portfolio allocations, I size individual allocations in my fund portfolio according to my evaluation of potential risk, with the largest positions having the least likelihood of permanent loss of capital, coupled with above average return potential. I initiate new positions with a weight between 3 to 5%, and sometimes the exceptional opportunities may get a weight of even up to 10% at cost in the beginning. And I then sell down to my sleeping point if a single position becomes a discomfortingly large percentage of my portfolio by value. Because individual position sizing is important not only for its impact on portfolio performance,
Yeah,
but also for one's mental peace of mind.
absolutely.
I also tend to average upwards if the management executes above my expectations. And one should have higher weights in businesses with high longevity, good growth prospects, and prudent capital allocation. As Mae West has very aptly said, too much of a good thing can be wonderful. So, bet big on your best ideas.
And what are the fundamental metrics that you're looking at when for the short bets that you're talking about, where things are definitely on, like you're betting 10% of your portfolio in that sense? What are some of those metrics that you would be looking at in terms of filtering out?
I'll explain this with the help of an actual case study from my India fund. I think that'll I'll help the audience understand when to really bet big on an opportunity. Generally, these exceptional asymmetric risk reward opportunities arise from such special situations. It can be a demerger, it can be a merger arbitrage, or it can be a management or promoter change. So in March 2023, you had a company named Aarti Pharma Labs, which was spun out from Aarti Industries. And because Aarti Pharma Labs was a pharma company, because it was a small cap company, whereas Aarti Industries was a mid cap and chemical company, what happened was you ended up with forced selling. So basically, all the funds which were mid cap focus, they were not allowed to hold a small cap stock in their fund portfolio. So they started dumping the stock of Aarti Pharma Labs. Similarly, all the chemical oriented funds, because they were not allowed to hold a pharma stock in their funds portfolio, they also started selling at the same time. So shortly after listing, the stock of Aarti Pharma Labs fell more than 40%, and it came down to a trailing P multiple of just 12 times.
Wow.
Whereas there was another group company of the Aarti group called Aarti Drugs that was into more of bulk drugs and commodity pharma. That was trading at a trailing P multiple of 22 times, whereas a more higher quality business, because of forced selling, was available at 12 times trailing earnings. So this did not make any sense. So this was a case of where I use first principles thinking or the principle of inversion to basically understand what can a stock not be worth. We often talk about what a stock is worth, but if you invert it and just think what a stock cannot be worth, once you've established a floor price for a stock, the upside takes care of itself. So basically, I made that stock of Aarti Pharma Labs the largest position in my India fund with a weight of 8%. The stock has already given more than 250% returns in the last 2 years. So that is basically how you really capitalize on such opportunities.
That's fantastic. Any other examples where you might have started with a smaller allocation, but you got conviction over a period of time to build up there? Like, where you said you started with 3 to 5% and maybe built positions there?
This happened with Bajaj Finance. Basically, it was a stellar outperformer during the small cap, mid cap crash of 2018-19. So I had bought the stock in 2018. And, the management kept on executing well above my expectations. So I kept on adding more and eventually it came to almost 10% allocation in March 2020. But then COVID hit.
Yeah.
And then there was a big crash in the stock of Bajaj Finance. It fell 65% from the peak.
Yeah, but that's also a company that, Bajaj Finance is like a darling favorite of Dalal Street, right? Like, that's also a company which is often always argued that, it's always richly valued. But I think COVID was the only time where, you could have gotten it at a reasonable
Reasonable price. Yep.
Yeah. So that was the company that you started buying through COVID and then built on?
I was building on it through 2018, 19 and early 2020.
Okay.
Really, when it started falling after COVID, I did not add to my position. I actually reduced my position by more than half because you want to add to positions when the fundamentals are improving.
Yeah.
Because because it sometimes for things to get clearer and for the fundamentals to improve, it can take a very long period of time also. So you do not want to end up with your capital being stuck just out of hope.
Yeah.
You have to keep rotating into more higher, better opportunities from time to time.
Yes, let's talk about that aspect also because while everyone focuses on the buying aspect, I'm also very curious to understand the selling frameworks that people like you have in their minds. So when do you when in your mind do you think the selling opportunities emerge, or when do you start tapering off the allocations in your portfolio?
There are three big triggers. First one is obviously obnoxious valuations. For example, the moment a stock starts trading at a trailing P of more than 100 times, that means a lot of the future growth is already embedded in the current stock price. So that's a trigger for starting to trim or completely exit a position. Second exit trigger is any corporate governance issue or bad gross capital misallocation by the management. That's also a trigger for an exit, because investing is all about the trajectory of the return on capital employed. Basically, if the margins and the ROC of the business is on an upward trajectory, the company will keep on getting re-rated upwards. But if the ROC and margin are expected to deteriorate or weaken going forward, then you'll experience valuation de-rating. So these two triggers are also there for an exit. And third trigger for an exit, if you find a far superior opportunity compared to what you hold in your current stock portfolio.
Yeah.
These are the three triggers.
Yeah, and you